Hi, this is Ian Coleman, and this is this week's video analysis for the dollar index and the FX majors going into the week 4th of February 2019. Pretty quiet week really last week in FX, apart from Friday. We had non-farm payroll. We saw some upward pressure in yen crosses, especially dollar yen, but we still believe that the bias in the dollar is still to the downside. And if we look to this daily chart, we've actually got two resistance levels, 95.69, which we're pretty close to at the moment, close at 95.62, and then we've got this level here, 96.16. So we're still looking for downward pressure. We're looking for this previous low to break. We're looking for a move really towards this previous swing low, which is around about 93.80. So if we reflect that bias back onto the FX majors, like I said, the upward pressure in the dollar index could be quite limited, and we've got pretty solid support. We've got two support levels, one at 114.33 and one at 114.31 in euro dollar, and we closed at 114.54 on Friday. So again, could be limited downside. We're still looking for a rally higher. We've actually got our target level here, which is at 115.80. And then we've got the trend line resistance at 115.96. If we get a break of this support, and I doubt we're going to, then the next level of support is at 113.44. So we could see quite a deep move lower in euro dollar. But like I say, there's no really clear indication, just a doji style candle on Friday, that this upward pressure is coming to an end. Sterling dollar. I'm wondering if this is a fourth wave correction or an early fourth wave correction. So this being wave 1, and then up here to wave 3, and then down in 4, and this being just a mild inside 3-wave correction. Now we've got, if we just move that along, we've got reverse trendline support at 129.62. We've got our bespoke support at 130.09. Again, this area is looking really strong. If we do see a break, then next support is all the way down here at 127.68. Dollar Swiss, again limited upside. We've got strong resistance at 99.88. I'm then wondering whether or not we're going to form a bearish head and shoulders. So this being the left, this being the head, this being the right shoulder, and then a break of this neckline. And if we just do the measured move for this, so this would be the neckline, excuse me, and then we'd have measuring tool, which just use the arrow, and then a break of that, and it takes us down to that reverse sort of trendline support and our bespoke support. This is a weekly bespoke support, so it could poke through, and then as long as it closes higher, we regard that support to have held. So at the moment, looking to sell into rallies, it gets up towards this level, and of course that psychological one big figure, and we'll look for reversal signals to take us down here, where we've then got a medium-term bias to move higher. Dollar yen, I'm showing the 1 hour chart here. If we go to higher time frames, you can still see really how sort of mixed and choppy price action has been. This is the 8 hour chart. We broke this wedge formation to the downside. Normally we get a retest of the wedge. I don't think that's going to happen, but I still look to this area as being pretty solid to the upside. And if we look to this 1 hour chart, then we've got a 261.8% extension level, 109.73. We've got our bespoke resistance at 109.77. We've got this previous swing high here at 109.74. And the intraday chart, and I think it's the 4 hour chart, is posting a DMARC 12. Now a DMARC 13 normally highlights the end of a trend. So do I really want to be taking dollar yen higher? Well, not at the beginning of this week. I'm going to be looking at this area to at least look for short-term short trades. And then this is a pretty obvious area of support. So we could be range bound really for maybe 2 to 3 days in dollar yen, and then we'll have to have a look at price action then. But The medium term bias, we haven't really got a swing on it at the moment, just playing intraday trades. Dollar CAD, as you know, we're short from around about this level. We broke the head and shoulders to the downside. Now, the 61.8% pullback level of this last rally, which can be seen in 5 waves, is at 131.12. Now, we've got some bespoke support at 130.65. We made a low of 130.68 on Friday. If this head and shoulders is going to play out, then the measured move is down here, 127.09, and that's what we're looking for over the long term. But over the medium term, we could quite easily bounce off this level. There's a D mark 13, which, like I said, normally highlights exhaustion, but the upside should be limited. So we've got reverse trendline resistance coming in at 131.96, and then we've got pretty strong bespoke resistance at 131.80. So really, if we're not short, and we already are, but if we weren't short, then we'd be looking at this as a prime area to get short. The medium term or long term bias is still to the downside, but we could see an intraday bounce at the beginning of next week. So just playing that range really at the beginning of next week. But the prime area to get short is here, 131.80. Aussie dollar, 5-wave move to the downside. This is the daily chart. Prime area to get long. We've sort of stalled. Not really much price action for the last 2 days, but we have got a 13 count again on the intraday chart, so we're wary of buying at the open. And also, if dollar CAD has a bias to move to the upside or correction to the upside, then a lot of the times Aussie dollar has a bias to move to the downside. So really watching these two commodity pairs quite closely. 73.08 is bespoke resistance. We have posted a 13 count, so we don't want to be buying into that resistance. The medium term bias is still to the upside, and we're still looking at 73.77 as our medium term long term target. To the downside, we've got strong support at 71.55. So we'd actually like to see a move lower at the beginning of next week, just to take the next long to the upside, and then we're probably going to move back down here. So reverse head and shoulders, left shoulder, head, neckline maybe, and then move lower for a right shoulder before we take the next move higher. Euro sterling, the long term bias is now negative. We've posted a bearish outside candle on the monthly chart. We've also posted what we call a D-mark flip. I can't see really any indication why you look the other way in euro sterling now. We've got some bespoke support at 87.15. This is our prime area to get short of euro sterling next week, hopefully. It was an area that was quite sort of pivotal, a congestion area. We've also got the 50% pullback level at 88.54. We've got our bespoke resistance at 88.52. So we'd love to see a corrective move, probably a choppy corrective move, might dip lower first in a 3-wave pattern. Talking about Elliott wave, digressing a little bit here, 1, 2, 3, 4, 5. So really this move to the upside shouldn't be a straight line. We should be seeing an A, B, or A, B, C, and then trying to get short up around here. Euro yen, I'm just showing this daily chart because it really is pretty mixed and pretty volatile price action. We've got bespoke resistance at 126.02. We closed Friday at 125.46. There's some scope for some upside pressure, but then we've got bespoke support at 125.04. We haven't got a medium-term bias on this really. We're just going to play that range, I think, at the beginning of next week, and see if we get some sort of decent continuation or reversal formations. Okay, I hope you have a good week, and we'll speak to you again on Wednesday with the trade of the week. Okay, thanks very much. Bye for now.